With both parties having unveiled their costed platforms, it's time for a head-to-head economic showdown. Today, we're comparing two bold visions for Canada's future: the Conservative Party's 2025 platform and the Liberal Canada Strong plan. To get AI's analysis, we asked GROK for a data-driven rundown of the two competing budgets. With US tariffs looming and global uncertainty on the rise, which plan does AI think will boost Canada's economy, tame deficits, and deliver prosperity? We'll dive into key metrics: GDP growth, per capita income, debt, deficits, inflation, interest rates, and growth potential, to find out. First up, GDP growth: how fast Canada's economy will expand. In the short term, from 2025 to 2027, the Liberals take the lead with 2 to 2.5% annual growth, driven by their massive $150 billion public investment in housing, defense, and clean energy. These high-impact projects create jobs and offset the sting of US tariffs. The Conservatives, with 1.8 to 2.2% growth, rely on tax cuts and resource projects like LNG and oil, which provide a quick boost but struggle against tariff headwinds. By 2028 to 2030, the Liberals pull further ahead, projecting 2.5 to 3% growth. Their focus on private investment, $500 billion catalyzed by public funds, and skills training fuels productivity and innovation. The Conservatives hold steady at 2 to 2.5%, banking on resource exports, but their growth is capped by volatile global commodity markets. The Liberals win here for their broader, productivity-driven strategy. Next, GDP per capita: how much economic output each Canadian enjoys. By 2027, Liberals project $62,000 to $63,000 per person, outpacing Conservatives at $61,000 to $62,000. The Liberal edge comes from investments in training and innovation, boosting productivity by 0.8 to 1% annually. Conservatives, with less focus on skills, see modest productivity gains of 0.7 to 1%, slowed by population growth. By 2030, the gap widens. Liberals reach $68,000 to $70,000 per capita, while Conservatives hit $65,000 to $67,000. The Liberal plan's emphasis on clean energy and workforce development drives stronger income growth. Liberals take this round for their productivity focus, giving Canadians a bigger slice of the economic pie. Now, let's talk debt to GDP ratio: how manageable Canada's debt is relative to its economy. From 2025 to 2027, Conservatives keep the ratio steady at 41 to 43%, thanks to aggressive deficit cuts. Liberals see a slight rise to 43 to 45%, as their higher deficits add to debt, though GDP growth cushions the impact. By 2028 to 2030, Conservatives lower the ratio to 38 to 40%, capitalizing on reduced deficits and solid growth. Liberals trail at 40 to 42%, as their investment-driven deficits decline more slowly. Conservatives win this metric, delivering faster debt reduction for a leaner fiscal future. Deficits: how much Canada borrows each year, are next. Conservatives start at $31.4 billion in 2025-26, slashing it to $14.2 billion by 2028-29, a 70% cut driven by $17.4 billion in spending reductions, like cutting consultants and foreign aid. Liberals project $20 to $25 billion annually, aiming for an operating budget balance by 2028, but their total deficit shrinks more gradually due to heavy investments. Conservatives take the lead here, with a clearer, faster path to deficit reduction, giving them an edge in fiscal discipline. What about national debt, the total we owe? By 2028-29, Conservatives keep debt at around $1.45 trillion, with lower deficits capping growth. Liberals hit $1.5 trillion, as their higher deficits add $50 to $100 billion more, though strong GDP growth softens the blow. Conservatives win this round, keeping debt accumulation in check, which could ease pressure on future generations. Inflation, how fast prices rise, affects every wallet. In the short term, conservatives face 3 to 4% inflation, fueled by tax cuts and carbon tax repeal, which boost spending and fuel costs, plus US tariffs pushing import prices up. Liberals see slightly lower inflation at 3 to 3.5%, with investments in housing and clean energy stabilizing some costs. By the medium term, liberals drop to 2 to 2.5%, as housing supply curbs shelter costs and global markets stabilize. Conservatives lag at 2.5 to 3%, with resource reliance keeping energy prices volatile. Liberals take this one, offering better price stability over time. Interest rates shape borrowing and savings. Both plans see short-term rates at 3.75 to 4%, as the Bank of Canada counters inflation from tariffs and spending. But by 2028 to 2030, liberals ease to 3.25 to 3.5%, thanks to stronger growth and lower inflation, giving room for rate cuts. Conservatives stay higher at 3.5 to 3.75%, as tax-driven inflation lingers. Liberals win here, with more flexibility for monetary easing, making borrowing cheaper in the medium term. Let's look at growth potential, how much each plan can turbocharge the economy. In the short term, liberals lead with strong 2 to 2.5% growth, powered by high-impact public investments that offset tariffs. Conservatives deliver moderate 1.8 to 2.2% growth, with tax cuts providing quick relief but less staying power. In the medium term, liberals shine with very strong 2.5 to 3% growth, driven by $500 billion in private investment and productivity gains. Conservatives maintain strong 2 to 2.5% growth, but reliance on resources risks volatility. Liberals dominate both periods, leveraging broader investments for sustained momentum. Finally, which plan is more viable in meeting its goals? The conservative plan excels in affordability and fiscal discipline, with tax cuts saving workers $900 a year and deficits slashed by 70%. Its resource strategy taps Canada's strengths, but volatility in global markets and spending cut backlash, like defunding the CBC, could derail progress. It's highly likely to hit fiscal targets, moderately likely for housing, and less so for resource-driven growth without tariff relief. The Liberal plan bets on long-term growth, with $150 billion in public spending to spark $500 billion in private investment. Its focus on productivity, clean energy, and inclusivity promises robust 2.5 to 3% growth, but ambitious private investment targets and provincial coordination challenges pose risks. It's moderately likely to balance the operating budget, highly likely to drive growth if investments land, and moderately likely for housing due to complexity. The Liberal plan edges out as more viable for long-term economic success, thanks to its productivity focus and inclusive policies, though Conservatives lead in short-term fiscal wins. And there's the data. Analyzed and compiled by AI. Completely unbiased. No prompts favoring either platform. Just the numbers, side by side with likely outcomes. The Liberals take the crown for GDP growth, per capita income, inflation control, interest rate flexibility, and long-term growth potential, making their plan a powerhouse for Canada's future. But Conservatives dominate in debt and deficit reduction, offering a leaner fiscal path. Both tackle US tariffs, but Liberals' broader investments give them the edge for sustained prosperity. Of course, there's more to politics than dollars and cents. Which platform's vision resonates with you?